blaming the United States for that, of China growing in power and not in any way aligning itself with the advanced industrial democracies of the West. Those are features that are only becoming more prominent on our geopolitical chessboard.
But yeah, the U.S. is still the U.S., and with a cooler head in charge at the White House, can they regain that position? And if they were to regain it, should the U.S. deal with China or Russia first?
They should deal with China first, second, and third. I think it's very appropriate that the Biden administration considers China to be the most important competitor and adversary of the United States around the world. By the way, the Trump administration largely felt the same, so I don't see there's going to be a dramatic change here. But in response to your first question, Francine, no, there's a serious ceiling on how much the United States could return to that old position of leadership, even if it wanted to. I mean, it's fairly obvious that no one's going to listen to the United States in terms of saying how government should run and how elections should run when the U.S. is claiming its own has been rigged. There's very little willingness of the Biden administration to pursue multilateral trade architecture, even though the TPP was originally something promoted, for example, under Obama and Biden, because the American public doesn't support it. So the big multilateral trade deals that are being done right now, whether it's EU-China or EU-Mercosur or RCEP, the United States isn't in any of them. And so, I mean, really, I think when you look at, can the U.S. be back? Sure, we can rejoin the Paris Climate Accord. We can extend the START arms control agreement for 5 more years. We can recommit to the World Health Organization. Those things create some normalization, but they don't create leadership. And I think on the leadership front, the United States will find both domestically and internationally, it's going to be quite challenged.
Ian, why go ahead with the impeachment of Donald Trump if there's almost zero chance of conviction?
Well, I mean, not going through with impeachment is also a problem. It implies that nothing was done wrong. So if you're a Democrat, you go through with it both because you want to undermine Trump and maybe pick off a few of the remaining 5 independent voters in the country, but also to show that you think at least that this process still matters. Having said that, I think we all know here there is zero chance that this impeachment becomes a conviction. And by the way, the activities we're talking about, which Liz Cheney on Fox News made very clear, this was the most reprehensible behavior, rule-breaking behavior of any president in history. That's the Republican ranking number 3 in the House of Representatives in the country. And yet, despite that, impeachment no longer works. So what that means, what it tells both Americans but also the rest of the world, is you can no longer engage in an impeachment process to constrain a president unless you actually hold sufficient power in Congress. As a legal process, in terms of rule of law, it literally is broken. And that of course, is a significant hit to what we think of as representative democracy in the United States.
Let's come back with Dr. Bremer. Lots more to talk about, just tons and tons. We could talk to him for 2 hours here, and we'll try to do that in a number of minutes here. Ian Bremer with us in this hour. Futures up 12, Dow futures up 116, and now I go to the Queen Bee in London with Bumble because she's an ambassador. I mean, Francine, explain Bumble to me. What a lift in their IPO, 29 out to 38 center tendency.
I think neither of us, Tom, have used Bumble for quite some time. I think the founder's like 32 or 33, and it's a dating app. And it's a dating app that's been, you know, one of the best dating apps. I mean, certainly if you look at the valuation, it's just pretty incredible, Tom. So if you look on the website, it doesn't really say, you know, it's just for dating. It's you can meet new people for dating and friendship. But, you know, if you're single, that's where you go on. And that's nicely pricing their IPO at the top of the range. 37 to 39 from 28 to 30. You have to ask about valuations, Tom. I mean, these valuations are incredible. This is like $10 more than their initial price bracket.
Yeah. Well, what I know is half our control room is on Bumble like 6 hours a day. Tania says women reach out to men is how this works. That's the Bumble.
Welcome to the
distinction.
21st century, Tom.
Dr. Bremer's listening to us going, what are they talking about? Let's move on. Futures up 12. Dow futures up 113. Ian Bremer to continue with us. An important conversation, Balance of Power with David Weston, Dershowitz for the defense. This is Bloomberg. Good morning.
Okay, ladies and gentlemen, I'm going to place an order to buy Swiss franc. So all of you, if you look into trade Swiss franc, right now indicators, our strategy tells us to place an order at 0.9006. Let's find it right here. Okay, position, order placed. So let's see, let's wait. Hopefully we will get into this trade.
一个就是我们看中它的那个品牌吧，它品牌就是说东西比较干净嘛，然后比较方便的话，味道也还可以的话，我觉得我会考虑吧。外卖的话呢，也是一种方式，就是品种会多一点嘛，各有它的特点吧。
这个车的话，目前我们是通过这个手机 APP 上，就手机扫码，然后微信和这个支付宝扫我们这个车上的这个二维码，大家就会进入到一个小程序的这个界面，然后呢就可以选购自己喜欢的商品，然后付款之后呢，这个柜门会自动打开。
支付成功，请拉开右侧车门取货并关紧柜门。
然后我们会取餐，然后完了之后呢，就把餐这个柜门关上，然后整个购买的这个流程就会结束。
柜门已打开，请取出货物并关好柜门。
Do you have any interest if President Biden invited you just to come and take a tour of the White House just to see what it looks like?
If he wants to talk about how to empower people, boy, I would be there in a nanosecond.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bloomberg Surveillance, future highs for the day. Francine Lacroix in London. I'm Tom Keene in New York. Francine says stay on the market. She's right. Futures up 14. Dow futures up 122. The VIX still don't have some good movement there, 21.74. We are with Ian Bremer of Eurasia Group. Ian, I want to go to the fact that every president enjoys a crisis and uses it optimistically. You have a tome coming out, The Crisis We Need. For President Biden, is his crisis the brutal fact of his age and that this will be a different administration because of his age and because of the placement of Vice President Harris?
No, I mean, it's not helpful, but it's not his crisis. His crisis is, 450,000 Americans dead from coronavirus. It's the worst crisis of our lifetimes. the economy still with all sorts of serious challenges, particularly for those that aren't college educated in this country. And his response is, I better get vaccines to people as fast as possible, as well as a $1.9 trillion stimulus. The latter made much easier, of course, by the fact that the Democrats have, by the thinnest of possible margins, retaken Senate.
Ian, when you dovetail this with his reach out to allies, is that a routine process or is this going to be delicate?
Okay, guys, position opened on Swiss franc at 0.9006. Okay, we're in. We have order filled for this pair. Speak to you later, guys. Let's wait until this pair will bring us profit.
The calls have been utterly unsurprising. On Iran, there's been, yes, we want to get back to the deal, but we're very cautious in the way we're doing it. On China, on Russia, a fair read of Biden's foreign policy by a Democrat or a Republican for the first few weeks would find virtually nothing controversial in what they've done. So in that regard, it's very normal. The only big move away from an expected administration would have been the decision to put the Saudi relationship a bit on ice. And let's remember, Tom, the first place that Trump traveled outside the United States was quite unusually Saudi Arabia. So that also sends a bit of a message. But the issue, of course, is that Biden is doing all of this after 4 years of Trump. He's doing all of this after January 6th. He's doing all of this when countries around the world look at the United States and says that I can't count on that ally. That country is not the country I thought it was. After the events of January 6th, the world leaders that I spoke to all over the world were stunned. It did shake their view of the United States, of their important ally in many cases. And they were asking me, what are the consequences? What happens to Trump as a consequence of this? What happens to all of those members of the House and Senate that very evening continued to vote against the accepting of the electors of the free and fair election? And of course, as we found out, the consequences that Trump was undemocratically removed from social media, at least for a time, but there are no legal consequences for him or for his colleagues. And I think that sends a very strong message to other countries.
Will that change? So, if you look at some of, you basically say that the impeachment process is now broken. Yeah. Will something change in the American institutions to make sure that they're actually stronger or just as strong as the next president, whoever that may be?
I don't think so. And let's look at why they're broken. Why is the United States so much more of a flawed democracy with eroded political institutions than, say, Canada or Germany or Japan? Because what we've seen in the United States around impeachment, around January 6th, that couldn't happen in those countries. What we've seen around, most Trump supporters saying that they actually believe that Biden stole the election, that couldn't happen in these other democracies. There are three big reasons. One is the structural racism unaddressed in the U.S. and the backlash against minorities, because as the U.S. moves towards being minority white in 2044 is the expectation. Yeah. Second is the role of animal spirits and money in capturing the regulatory and the political process, particularly problematic for all of those left behind whose labor has become irrelevant in capitalism. And third, the outsized role of media and social media, so delegitimized and polarized. If you don't fix those three things, you can't get America back.
Thank you. Ian Bremmer, greatly appreciated a briefing here to get this week of impeachment started with Eurasia Group. Please stay with us. This is Bloomberg. Good morning.
To be an action that was either illegal or caused disruption. And this was really political satire, kind of writ large, and it was all about actually trying to get to the man himself and make him see how we see him. And in order to do that, we knew it had to be big and it had to be colourful and it had to be somewhere where everybody could see it. It's important because we didn't just do this for attention. This was actually about making a serious point, which is that the majority of people in this country do reject the politics that Donald Trump represents.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas. You need to have a business model fundamentally where when you do well, the world around you is doing well. If that is broken, it's very hard to fix.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, hedge fund giant Renaissance Technologies posted its worst ever returns across its public funds with at least $5 billion in redemptions. According to an investor letter, clients pulled out as much as $1.8 billion in December and then $1.9 billion in January. Now, this is as the company comes off a rough 2020, with its 3 public hedge funds posting double-digit losses. Well, joining us now is Nishant Kumar, Bloomberg hedge fund reporter. Nishant, thank you so much for joining us. Is this just is there something more sinister than simply saying, well, Renaissance just did really badly in a volatile environment during the pandemic?
Only time will tell how sinister this is, but this is clearly a huge setback for a quant investing firm, which is seen as the gold standard in the industry. $5 billion outflows on assets base of 60 billion is still more than a tenth of the assets. So it's a significant outflow. But given what investors look for when they go and invest in a quant shop, so basically they're buying the expertise, they're buying the talent, they are buying a huge amounts of data that come with all these investments, on the basis of which some of these quant models take their decisions. And when you look at Rentech from that angle, I don't think there are many options.
But what I don't understand, Nishant, is some of the public funds did really badly, but then you look at the flagship Medallion Fund, and it's done actually pretty well.
Absolutely. That's an interesting question that keeps on being asked on social media and everywhere. Medallion has a track record of producing 40% annualized return since its launch. But that fund is not open to outside investors. It's only the founders and employees' money. But the funds which are open to outside investors are different. Medallion is almost a high-frequency fund. They take those decisions very quickly, milliseconds, seconds, so very rapidly trading quant models. And they do well when you see a market like last year when, things turn at a very rapid pace. That's why Medallion did well last year. While the other funds open to public are slower models. They hold their positions for weeks or even maybe months. And last year's rapid shifts in market was not suitable for those kind of models. Also, their largest fund is a long biased fund. So they suffered last year, as well as that fund is down 9.5% in January.
Nishant, when you look at some of these big hedge funds, I mean, what's their main concern right now? Is it public, being in the public eye, public perception, or is it just internally how they put together a succession plan that works?
Succession planning obviously has been one of the biggest concerns from the industry. Not very rarely a hedge fund in the industry has done succession planning successfully. Hedge funds are always built around individual traders, so that's against the very nature of hedge funds to, have a succession planning as such. But nevertheless, we have seen the likes of D. Shaw and Oxis doing that successfully, but there are far few examples of that. In terms of what is the biggest concern right now, I think hedge funds had a decent year last year. Many of the largest funds did perform. If you look at some of the rock stars of the industry, so macro traders, Alan Howard, Chris Rocco, they had amazing year. In fact, record year of making money last year. So I think investors are coming back to the industry in a way, especially when you look at the frothy valuations, if we can at all call that as a market valuation right now. Then where do they go? I mean, hedge funds have a compelling opportunity this year and a compelling story to, sell this year.
Nishant, thank you so much. Nishant Kumar there, of course, our spearheading all of our efforts on hedge funds. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Treasury Secretary Janet Yellen is making her case for Congress to pass the Biden coronavirus stimulus plan. Yellen says the U.S. can return to full employment next year if the package is enacted. Without the stimulus, Yellen says it may take until 2025. Republicans argue that the plan is just too expensive. Donald Trump's second impeachment trial is almost certain to end in acquittal. Still, it will deliver a public reckoning for his presidency, and it will influence whether his populist supporters continue to dominate the Republican Party. The impeachment trial begins tomorrow in the Senate. And UK exports to the European Union have fallen as much as 2/3 since Brexit. That's according to a truckers group, which says trade is being held up by new red tape. It also says that up to 75% of the trucks that arrive from the EU are returning empty because there are no goods for them to transport. And in sports, Tom Brady is still super. The 43-year-old quarterback guided his new team, the Tampa Bay Buccaneers, to a 31-9 win over the Kansas City Chiefs in the Super Bowl. It was Brady's record 7th Super Bowl win. The other 6 were with the New England Patriots. He threw 3 touchdowns and was named the game's most valuable player. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thanks so much. Up next, we speak with Howard Ward. He's Gabelli Chief Investment Officer of Growth Equities for Gabelli Funds. That's coming up shortly. We talk reflation trade. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix, Tom Keene. We're thrilled you're with us here on a Monday. Get started on a busy week. We've got politics to look at. David Weston, look for Balance of Power. Kevin Cirilli, Sound on Radio, Coast to Coast. Really interesting to see the conversations they'll have this week. Our conversation are better markets. Futures up 13. Dow futures up 120. Let's look at a chart right now. We can do that. And this would be back a few years, as they say. This is the Dow back to the Guadalcanal low of 1942 and up and up and up and up. And this leads to, without question, our most important conversation on this unloved bull market. Howard Ward joins us with Gabelli Funds with decades of experience in finding the courage to stay in the markets. Howard Ward, how unloved is this market?
Well, Tom, there's still $4.3 trillion sitting in money market funds, and that is down from the peak, which was back in May when it hit $4.8 trillion. But it's still $1.2 trillion above where it was when the COVID crisis began, and also back in the summer of 2018-19, it was more like $2.8 trillion. So a lot of money is still sitting on the sidelines looking for a home and not getting any kind of a return. And so a lot of that money will continue to find its way into the stock market simply because the outlook for the economy is quite positive.
The ratios here, and folks, the vanilla ratio is the price to earnings ratio, comparing the price of a security, say Apple, to the underlying earnings of the company. And Mr. Ward knows 47 other ratios that really matter. Howard, do we underestimate the earnings power, the cash flow power of corporate America to take away that fear of a sudden drop?
Tom, some people will look at last year's returns in stocks and say, well, that was all about PE expansion. And that is somewhat correct, but not completely correct. Because the reasons that the PE has expanded so much during calendar 2020 was in anticipation of strong earnings this year, which we are getting. This has been a very good, Q4 has been a very good earnings season. I think we're going to see earnings this year in the $175, maybe $180 range on the S&P. The consensus is still about $165. It's too low. The economy is doing too well, even though there are certainly pockets of weakness. But the recovery trade is ongoing. The COVID situation is now getting better, not worse. And I think a month from now, we will feel dramatically better about that. And so we're looking at tremendous amounts of stimulus. I feel like a broken record with this record monetary stimulus, record fiscal stimulus, Fed promising low rates for several years or a couple of more years. And in this kind of a backdrop, stocks win.
Yeah, Howard, you may sound like a broken record. I always sound like a party pooper, like Mother Superior, saying, but what about the variations? I mean, if you look at the variance, why is the market completely disconnected to what we're seeing in the vaccine world?
Well, in the vaccine world?
Yeah, I mean, we have an AstraZeneca, vaccine that potentially doesn't really work against the South African variant, which means that there could be a delay in vaccinations and therefore a recovery. And the markets look at, the stimulus and don't look at what's happening in our vaccination world and when, economies can fully open again.
Well, I think the markets are looking out a few, beyond the next month or two. I mean, I think we are looking at an improving situation for the coronavirus here in the United States. I think that was documented pretty well in the New York Times, I believe, over the weekend. and I think it was surprisingly more positive numbers than what we had been thinking. And with the vaccination rolling out here and ramping up, I think here in the United States, I think the reopening trade and the stronger economy, the pent-up consumer demand, which is driving consumer spending very strong in certain categories, I think this is all just going to continue to improve over the balance of this year, not without some hiccup here and there for sure. And globally, things will get back on track. The situation with the variant in South Africa is a concern. The AstraZeneca vaccine has its issues, but fortunately, there are other vaccines which look more potent against that strain. And so I'm optimistic. I'm Ted Lasso, the famous soccer coach, and I'm going to be optimistic here and positive, and I'm not. Yeah. I mean, I'm concerned about the vaccine, but I think that
Howard.
Yes.
Yeah, and I'm the Giselle Bundchen of the Fed. Will the Fed let the economy run hot?
Well, I see the 10-year Treasury is knocking on the door of 1.2%. That's the highest that's been in a while. I think rates have inflected higher. I think that's going to be a slow march higher, and that's going to weigh on stocks as rates rise for sure. But it's also not all bad, and certainly the Fed wants to have a little bit of hot inflation. The Fed has been extremely concerned about the economy, and they're willing to give up some inflation in return for more jobs. And so, I think the outlook for a year-end target price for the S&P of 4,400 remains very positive, very good. And that would be looking at a $200 S&P number for 2022, wow, which will be discounted at the end of this year at around 22 times earnings. Right now, we're more like 23 times the consensus for this year. So I think stocks are the only game in town, period.
Howard, is technology still part of your plan? I notice that Credit Suisse really has emphasized don't get out of technology. Do you agree?
I totally agree, Tom, because there's growth and there's value, and there's also this same sort of structural change, and it's a digital world. We are increasingly dependent on various forms of technology, and the digital economy is growing about 4 times faster than GDP. And so, absolutely, we have more than 50% of our fund is invested in various forms of technology, and that's where a lot of the growth is.
Now do the math.
It looks to be durable.
3,900 to 4,400. We'll figure out that percentage math on the break here. Howard Ward, we're thrilled, can continue with us with Gabelli Funds, with his optimism on being in the markets, always challenging. We look forward to continuing with him. On the Super Bowl, Francine, I look at the ads. The one I loved was a GM ad. I thought Will Ferrell, Norway. I'm in Finland. Norway. I thought that was Norway. I thought that was a great ad. Norway.
Yeah, it was fun actually, and then he punches into the global, which is kind of like, there you go. That's how we all feel as we miss traveling. No, the other one, Tom, I think if you look at Reddit and Robinhood, I mean, both had ads, and they weren't JPEGs. I love the fact that they're kind of so nimble and turn things around.
Francine, we are more qualified than anybody from sea to shining sea to do an exclusive 1-hour surveillance with only Norwegian guests.
On Super Bowl.
Only we can do that.
Yeah. Especially if we get the central bank governor. Tom, look, what's also important is that there was a Six-Nation rugby match. I know that, my family enjoyed it because it's the only me time I had over the last, 3 months. We're learning the national anthems to occupy the kids.
Wait, you're killing the punchline. Italy got clobbered, right?
Clobbered. That wasn't the punchline. I just decided not to talk about it.
Okay.
Scotland did really well. Yeah, we don't talk about Italy on rugby, Tom.
Norway. We'll be back. Howard Ward with us as well. Futures up 13. It's a Norwegian coffee this morning. Da 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 da.
feel we have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. SoftBank Group's Vision Fund posted a record $8 billion profit in the final 3 months of the year. A stock market surge lifted the value of the fund's investments, and it helped portfolio companies such as DoorDash go public. Hyundai and Kia say they are not in talks with Apple to develop a self-driving car. Bloomberg learned that weeks ago, Apple halted discussions with the two Korean automakers about building an electric vehicle. Reports surrounding Apple's possible entry into the auto market re-emerged this year. And in London, Brent oil rose above $60 a barrel for the first time in more than a year. It's another milestone in a remarkable comeback from the biggest demand destruction in a generation. The coronavirus pandemic led to lockdowns and grounded planes. And private equity firm L. Catterton is pulling ahead in the bidding for iconic German sandal maker Birkenstock. The firm is backed by the French fashion house LVMH. Bloomberg's learned that Birkenstock's owners prefer L. Catterton's track record of buying and expanding family-backed consumer brands. A sale could bring in around $5 billion. And that is your Bloomberg Business Flash. Francine?
Thank you, Ritika. I just want to know if Tom owns a pair of Birkenstock, because there's the correlation between fashion doing well and Tom Keene owning it is actually pretty high. People underestimate the fact that our Tom Keene is like a fashion guru, Tom.
I don't have any Birkenstocks. No, you've got to be sensitive like Howard Ward own. He's probably got 3 or 4 pair. I like my Doc Martens though. I find the Doc Martens are outrageously comfortable.
Well, yeah, and actually the IPO is outrageously priced if you look at some of the metrics over the last 2 to 3 years. I'm not saying it. Analysts who are smarter than me are saying it. Let's go back to Howard Ward, Gabelli Fund's Chief Investment Officer of Growth Equities. Howard, there are many IPOs out there. Dr. Martens is one of them. Bumble is another. The valuations could be pretty frothy. Is that a statement that you would say across the board, or is there fundamental actually even supporting these fledgling IPOs?
So I think that, my biggest reservation about the stock market, which is a sort of a shorter term reservation, is that the sentiment is running hot. And you can measure that by looking at the number and the level of IPO offerings. I mean, since this last summer, it's just gone through the roof. And the valuations do look frothy to me, whether it's a traditional IPO or a SPAC. These all look a little bit crazy to me. And so there are certainly excesses in the market that I think people should be aware of. And of course, we had that situation last week with GameStop. That was insane. I'm not sure what to make of that, except that I imagine most of the people that got involved in that may have lost money. So, but yeah, I think that we do have to be very cognizant of what's happening in some of these corners of the market where stocks, you just shouldn't throw money at anything. I mean, I think you should do some some research and understand what you're paying for. So yeah, it's a concern, but it's a short-term concern. It'll wash out. I think it's a signal that there is a 10% correction somewhere on the horizon, not too far out there, that could
what's the catalyst?
Based on who knows what. Yeah, we don't know the catalyst, but yeah, these things just have they come out of nowhere, and the market's down 10%, and kind of the market we have today, that could be over a period of a week or two, and you're done.
Howard, how do you define or find the distinction, I should say, in use of cash engineering of share buybacks from Apple versus share buybacks from IBM years ago that got IBM into trouble?
Well, Tom, this is one of those situations that a share buyback looks brilliant when your stock is on a long-term upward trajectory, the way Apple's has been for the last 10 years. It looks horrible if you're buying back stock to a secular declining situation, the way IBM did. In fact, even in this past year, I remember in the case of Boeing stock, which has had its difficulties in the past year, I think Boeing had bought back, I'm cupping this, but I think about $100 billion worth of stock over a past number of years. And then they found themselves on the ropes needing capital in the face of COVID-19 plus their other 737 MAX problems last spring. And of course, they could have, paying up for Boeing stock after it had declined precipitously didn't look too smart. And so, the whole buyback thing really depends on the direction of the stock. And if it continues to rise, then you look brilliant. And if it goes down and you're underwater on that buyback, you don't look so smart at all. It looks like a terrible idea.
Howard Ward, thank you so much. Greatly appreciate it with Gabelli Funds. Just too short. I want to point out 12% up on his target from SPX 3,900 out to 4,400. A double-digit return looked for by Mr. Ward. Francine, we're really beginning to see the markets lift. We've got further persistency here with futures up 14.
Yeah, you just wonder whether the reflation trade continues despite new variants. If we find out that more vaccines actually don't work against the South African variant or others, which we don't at the moment, and trial is also limited, you wonder how long it still has left.
Yeah, we'll see. We've got a very important note here a number of minutes ago, 2% on a 30-year bond. We did get that print. I've got that somewhere here. I've lost it. 2% on the 30-year bond. Right now, 1.9865 in the 30-year bond. That's out a good 2 basis points. Coming up, we simulcast. Stay with us. This is Bloomberg. Good morning.
Okay, ladies and gentlemen, I am placing a new order to sell short Swiss franc. So we'll have 2 orders. This order to sell short at 1.90069. Okay, order placed. Sell short. At the same time, I'm going to place short order to sell Canadian dollar at 127.75. Okay. Position open on Canadian dollar at 127.75. That's the short.
years are going to provide about twice the power in just half of the area that the existing solar arrays cover.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions.
Also, short position open for Swiss franc at 0.90069. Okay, that's it. We have two positions. Swiss franc, one position is long position, another position is short. Okay, that's it. Let's keep an eye on those two positions. By the way, if you don't know how I did it, why I did it, all strategy is available on our website. You can see on the red colored ticker website where you can get the strategy, and you will see, you will understand why I trade this way. Okay, guys, speak to you later.
Turn, and it will dictate the pace and the shape of the recovery as well.
A lot of the US stimulus actually isn't stimulus at all. It's an antidepressant.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. With equity futures up 14 points on the S&P 500. Let's skip the Super Bowl happy talk and get straight to this market, Tom Keene. Yields are higher, and a massive debate going on down in DC on whether this package, this fiscal stimulus package, is too big.
Well, I may be blinded by the lights, but John, I'll tell you, I'm blinded by the correlation right now. You've got major correlation. Folks, it's not, we do this every day. It's not just about equity markets lifting, futures up 13. John, you'll do the data check, but it's the way it's up. John, 30-year bond, 2% yield. What does that mean for stimulus?
Inflation expectations picking up, Tom, off the back of this stimulus discussion.
You
want me just to brush over the fact that you dropped in some weekend lyrics? I'm going to do that because I don't want to talk about it.
I'm running out of time. Let's just keep going. I'm running out of time. Keep
nice
going.
Again. There you go. 2-0 to you. This bond market, Tom, yields high not just on treasuries, but on bonds as well. So it's German bonds lower, treasuries lower, just a little bit. But this discussion, I think, is really, really important down in D.C. Larry Summers, the former Treasury Secretary, is not just saying it's too big at 1.9 trillion. He's saying it's the composition. He would go to 1.9 trillion, Tom. He might go even bigger, but it's the composition that he seems to be pushing back on. And I think that's important. This is about income relief for this year and next year, and not enough investment in sustainable, inclusive growth over the next several years. And I think that's where many people want the focus to be.
Two things to get your reading in on Monday. Rich Miller's article is brilliant with Bloomberg. It's a public service, and also Professor Summers republishes in the Washington Post on it. John, I'm looking around. No one's around to judge me, but I would say, John, and your point on negative yields, the Swiss 20-year yield is a lesser negative, and could it even go positive? That's a huge deal.
Just a little lift. We'll stay on top of the bond market through this morning. Lisa Abramowitz, Chairman Powell speaks a little bit later this week. That could get interesting.
Well, honestly, this might be what's driving markets more than anything, which is just Fed stimulus. And there's a question about central bank stimulus and how they plan to gracefully exit stage left when the time arises, if the time arises, whenever that may be. I'm looking at that on both sides of the Atlantic. 11:20 a.m. ECB President Christine Lagarde is speaking at the European Parliament. A big question about soft exits. What does that mean, John? How does that get accomplished, given the dominance of central bank action right now? That is the big debate, and perhaps she will be addressing that. 12 p.m., also focused on central bank action. Cleveland Fed President Loretta Mester, an influential voting member, to speak at a Rotary Club event held today in Toledo. Very interested to hear her take on one of the key questions that Matt King of Citigroup really raised, which is, does elevating asset prices to bubble levels actually help them achieve their goal for full employment and faster inflation, or hinder it? And frankly, that is something I have not seen an answer on. Also today, the House of Representatives is beginning work on a stimulus bill that you're talking about, John. The composition of it really key, with one big question being that component on that the $1,400 checks to individuals. What is the eligibility of that? How low will it go to try to exempt some of the higher income earners that have been part of the big debate really here, the idea that it will just go straight into savings and not into the regular economy, John?
Let's build on that and get straight to the price action of this Monday morning, shall we? It looks a little something like this in the equity market. Futures with a lift again. We add some weight to the S&P, 3,900 just around the corner. On the S&P 500, all-time highs in the United States, globally in the equity market as well. In the bond market, a lift for Treasury yields up another 2 basis points, very close to 120 at 1.1860% on a 10-year maturity in the Treasury market. The banks last week, Tom Keene, absolutely flying. Bank of America up 9% last week. Biggest weekly gain for the equity market and for the financials going back to early to the middle of November.
That's a reset. I mean, and again, I go back, John, to the election. Take it to November 3, November 4, and you've got banks up 30% plus as well. Howard Ward, moments ago on Bloomberg Television, 4,400 SPX target, John.
Joining us now, Stuart Kaiser, UBS Head of Equity Derivatives Research. Stu, great to catch up, sir. This bond market, these yields breaking out just a little bit. What's the tolerance of this market for that, Stu?
Good morning. I think the tolerance is pretty high. I mean, historically speaking, equities, do well when yields are rising outside of tightening cycles. I think the reason for that is, yields usually rise when growth expectations are rising. So I think there will be, a fair amount of tolerance of this, but particularly if the Fed, remains easy and wants to be behind it. The second part would be inflation expectations. The 10-year break-even is about 2.2%. Historically speaking, when that number gets kind of 2.25, 2.5, it does turn into a little bit of a headwind for equities, so we'll definitely be following break-evens. But I think big picture, if yields are moving higher for the right reasons, which is growth rather than policy tightening, it shouldn't be too strong a headwind, at least not yet.
In your head, Stuart Kaiser, what level of 10-year yield begins that ambiguity between a good rise in yields and a more challenging rise in yields?
It's a great question. I think the level that's been talked quite a bit about is probably 1.5%, which we're obviously a pretty good distance away from. The market will obviously try to pre-trade that. But something around that level, though the market's fickle, right, Tom? I mean, it might focus on 150, and then if equities are still rallying, they'll move the number up to 2%. So I think it'll be the big round numbers that the market will be most concerned with. They'll also be looking at where real rates are. On the back of that, if real rates are also rising, that could be a little bit of a different issue than if it's all coming from the inflation side.
Stuart, you focus on equities. You focus on derivatives. We're talking about bonds. Is anything in this market tied to fundamentals that has to do with corporate earnings or anything like that? Or is this all tied to the Federal Reserve and actions there?
I like to think there's a fundamental aspect to it. I mean, the stimulus will hopefully drive growth higher. Folks have been revising GDP forecasts up. 4Q earnings are coming in 20% ahead of consensus. So that I think is a positive. So, look, I think a lot of it is balance sheet and liquidity without a doubt. But if you think back to, what really kicked off this rally, you had the election, but then you had very good vaccine outcomes, and then you had a large stimulus package, which, I think for most investors, they're reading that through to a bigger growth impulse. So, the liquidity, I think, helps at the bottom when you're trying to find the floor. On the way up, though, the market, I think, is pricing that these things are ultimately going to translate into growth. Because if they don't translate into growth, then I think you're in a much bigger issue. So I like to think it all does come back to fundamentals, but I think it's a fair point that right now people are just trading big round numbers.
Well, in some ways, this bond market goes back to fundamentals. It's looking at the outlook for inflation, Stuart, and pricing in higher inflation. 10-year break-evens breaking out again. Strongest inflation outlook since 2014. Now, Stuart, from an equity market perspective, do I want to anchor myself to that somehow, somewhere in the stock market, or protect myself from it?
I think you're still viewing that as a positive impulse in our view. Last year in particular, equities were highly correlated with break-evens. And as I mentioned, that tends to be the case until you hit kind of this break point and call that break point somewhere between 2.25 and 2.5. So I think for now, it's a positive. I mean, if there's anything the markets have been looking for the last decade, it's nominal growth. So it's interesting now that we're getting potentially some nominal growth priced in that people are starting to get a bit scared of it. But I think for now, it's a positive that the index if it looks like they're going to break out and get to levels that could be troublesome, and by troublesome I mean get the Fed's attention, then I think we're probably okay for now.
To John's point earlier, Stuart Kaiser, UBS on the American banks.
UBS on the American banks. I work for a European bank, so I tend to keep my eyes closed on that.
Oh, but come on, you guys are doing securities research on the U.S. banks. Give me a little guidance here.
Look, I mean, if you look at U.S. banks, if you look at banks in general, that is a cyclical part of the market that, is generally positively exposed to rising rates. So I think if you're getting a large growth impulse in the U.S., plus you're getting rates a bit higher, collectively those things should be a net positive for the banking sector. Not to comment on any bank specifically, but the macro conditions are pretty supportive for bank stocks at this point.
Stuart, one thing that you do so well is you take a look at positioning. You understand how crowded trades are. How crowded is the bullish call right now, the reflationary trade in equities? In other words, how vulnerable is it to an upset on some sort of shock?
I think things have calmed down a bit in the past couple of weeks, Lisa. I think, coming from like middle of December when you had the initial bipartisan stimulus package announced, you saw a tremendous amount of options activity in financials, materials, and energy stocks. As earnings started, that started to kind of turn over a little bit and has kind of moved a little bit more sideways. And if you look at volume to open interest ratios, which is a quick and dirty way to see how much, tactical trading activity is going on, those have been very high. So I think what you've had is people, quote unquote, renting exposure to those sectors in the options market through a lot of tactical trading. And that's taken a pause, at least a little bit during earnings. So I think people are there. It doesn't feel like people are fully there yet. So I do think there's still some room to run. We like owning exposure to those cyclicals, whether that's the sectors in the U.S. or things like, German equities, HSI, emerging markets, areas like that. So we do think there's some room to run here, but it's definitely not unowned.
An education in how to make a US-based strategist of a European bank nervous by getting them to talk about US banks. Tom Keen's one question away of asking how Ralph Hammers is getting on at UBS. I won't ask you that, Stu. I'll let you run away. Stuart Kaiser, UBS Head of Equity Derivatives Research. I know you would. I know you would. That's why I wrapped up the interview. Banks Index, Tom, well followed in the United States. You know it well. Everyone does. The KBW Banks Index up 8.7% last week off the back of this move in yields.
Keep adding Woods there. And what's so important here, John, is to partition the banks out from the giant banks of which we don't understand how giant the giant are and the regionals beneath them. It's interesting to me, John, to see the differences. Lisa's brought up the trading dynamic, which was, thumbs up and all that, versus just conventional banking.
Yes, the vanilla trading, Tom, of the borrowing short, lend long story and booking the profit in between.
Nice, you nailed that.
Spread lending, you like that? That's that's 101. Banking 101. They don't do it like that anymore, though, really, Tom, do they?
Lisa's speechless.
Yeah, well, I'm waiting for you to ask John to explain offsides.
We can do that another time.